Hey guys, welcome to the advanced section of the strategy video. So I'm going to dive straight into directional bias, and I've just marked up the S&P 500 short channel that has recently occurred. With the directional bias in the past, we have been looking at the time frame pairings in isolation. And so in the advanced video, what I would like to say is that in terms of the top-down analysis approach, an advanced way to be catching and nesting these time frame pairings within one another is that you want to really nest inside, obviously, the highest time frame pairing and catch the momentum down, because you know that an M4 hour short, the very first take profit point is going to be on a daily anchor, which is right there. The next take profit point would be if this had to come down further and hit a weekly anchor, if this had to somehow just about face here and reverse, that would be your second take profit if you were looking for a longer hold, if you thought the trend was going to continue pushing in that direction. What you're trying to do is you're saying to yourself, well, this highest time frame has to keep shorting at least up until that first take profit point, if our directional bias is correct and all that good stuff. So you know if you're going to then be nesting in a weekly 1 hour short or a daily 15 short, you have got the momentum push behind this higher time frame to carry you all the way down there to the daily take profit if you want to hold these for lengthier trades. But if you don't want to, you can still take the early exit on a weekly 1 hour, which is the first exit point is going to be a 4 hour anchored wave in those two examples. And same with the daily 15, the first exit is going to be a 1 hour anchored wave. And you can see that there is some overlap between the exit points on some of these time frames. But all I'm saying in this advanced video with directional bias is if you don't want to just look at the time frame pairings in isolation of each other, you want to know where you are nested inside the highest time frame pairing, to say to yourself, well, if I'm entering a D15 here, I do actually have this momentum pushing me all the way down here. So this also becomes highly probable that it's going to reach there. All right, so whilst we're still on this example of the S&P 500 short nesting of the timeframes, we're going to talk about the advanced take profits. So in the intermediate video, we spoke about the lowest hanging fruit take profit, which would be the same time frame that you entered on. You'd be looking to break structure and get an anchored wave to exit that time frame. So for a monthly 4 hour, that would be an exit on the 4 hour time frame. If here you were breaking this structure nearly or creating equal lows with a 4 hour anchored wave. So you can see that the difference between this and that exit, that's how much you were leaving on the table for that. So now in the advanced video, these are the take profits for the respective entry pairings. So I'll just show you that. So the first take profit on an M4 would be a daily anchor, which we have already mentioned earlier in the video. So that would be there. And then for a weekly 1 hour entry, the first take profit would be on a 4 hour time frame. So you can see riding this entry to this exit being anchored over here, and that entry to this exit over here, right? Instead of using the same time frame that you had entered on, let's see what the difference looks like on the weekly 1 hour. So not too much of a difference on this one, slight difference. And on this entry with the intermediate exit, you'd be getting out just about there, leaving that much on the table, the gap between those two. Then the D15 exit on the advanced video would be the 1 hour exit, and you can see that there's some overlap with the exits as well. So I'll just go back to the summary so that you can have this little cheat sheet to see the exits. And if you are nested inside the higher time frame push, then you can say to yourself, perhaps for the weekly 1 hour, you want to do the higher take profit, which is the daily, which is the first exit on the monthly 4 hour. You can see the overlap there. So if you were holding the weekly, both weekly entries till the second take profit point, you would have really been swinging these two inside of the monthly 4 hour. and going rather to this exit point as well, which, as I said, there's a lot of overlap then happening between the entries and the exits if you want to do it that way. It's just based on how you're managing the trade. Perhaps if you've hit take profit 1 and you think that it has, the opportunity to go to the take profit 2 because it's nested inside the higher timeframes push, then maybe you want to put your stop loss to break even at take profit 1 and let it ride to take profit 2 if you believe it's going to get there within the fractal. All right, let's talk about the advanced entries for the respective time frame pairings. So for the higher time frame pairings, to catch the bottom wick of the candle as per the strategy, you don't get a lot of alerts, right? I'm just on the daily as the higher time frame, the daily 15 pair up, for example. If once we get a body close above the AEMA, you want to get basically trying to catch the bottom wick of every blue candle in the sequence, because you'd only be getting one alert per day. It's not going to be doing your head in. It's not that much to wait for. So to catch the bottom wick on each of these candles is fine. It's not a lot of mental effort. And that would be the same for the weekly 1 hour and the monthly 4 hour. If you're catching the bottom wick or the top wick, if you're shorting of each of the candles in a sequence, in a trending sequence, you're not getting that many alerts per day or per week. So your mental bandwidth is not getting used up waiting for those plays to occur. But with the 4 hour and the 1 hour as the higher time frame trending sequence, and we'll just go down to one of those time frames now. We'll look at the 4 hour. So if the sequence is trending, this is a massive one, right? This is a massive branch. Lovely. If you are waiting to catch the bottom wick on every single 4 hour candle in the sequence, I mean, there's some people who would be fine to do that, because some people will just want to catch one candle and hold it for those 4 hours and get out and just scalp the individual candle. That's fine. But if you're setting alerts for this type of trending sequence, if this is the pair you're playing and you're only playing 4 hour 5 minutes, you are going to be getting so many alerts all the time. It's going to be doing your head in, and there's nothing wrong with that. Like I say, if you want to scalp each individual candle because this is a wonderful trending sequence, wonderful directional bias is established, and the majority of these candles are closing blue. Ignore the ones that are changing color because of a different criteria. But this is a perfect trend to be catching all of that and to look for 4 hour 5 minute longs here. But if you don't want to use up your mental bandwidth looking on the 4 hour and the 1 hour for every single wick in the sequence, you can just enter the absolute start of the channel. So as soon as you get the confirmation, you're coming off an anchored wave, you're getting a 50% or more bullish candle closing across the AEMA, significant candle crossing here across the AEMA off a trigger. So you can say, right, I want to catch the first entry in the trend, the first 1 or 2 4 hour 5 minute wicks, and that's it. And then I want to ride the entire channel to wherever she might go. And that will free up getting all of these alerts pinging all the time. And like I said, might just do your head in a little bit. So what I would say for this, and I'll just use, this is obviously the better one because it's pulled back deeper. I'll use this one as the example. So, and you can do this in the 4 hour or the 1 hour pair up. When you get that first candle closing above the AEMA, just because this is a long example, of course, inverse for shorts. For shorts, you get closing below. So first candle body closing above the AEMA, coming off an anchor or a trigger wave. You want to mark that close level of the candle that brought you across the AEMA. And usually it's within 1 to 3 candles after that occurs, you're going to get your 4 hour 5 minute entry. So price will dip below that for at least between 1 and 3 candles. And then you get your entry, and then it starts to break back up on that close price. So whatever that close price is that brought you across the line initially. Okay. Sometimes it can be more. Usually with my back testing, it's between 1 and 3 candles. So I'm going to mark the open of 1, 2, 3 candles after the one that has brought you across the line. I have marked the close price for that candle. Let's just go and have a look and make sure that I have got that's the accurate close price. So basically we're saying within this 4-hour candle or this 4-hour candle or this 4-hour candle, we want to try and catch a 5-minute entry before it breaks back up on this close price of the first 4-hour candle that took us across the line to start the trend. We want to catch the trend at the absolute beginning instead of trying to long the bottom wick of 20 blue 4-hour candles in the sequence and riding each one individually, which could be a bit of a headache. So let's have a look where we would have caught this. So here's our anchored wave, and if you've watched the intermediate video, you would see the risk and identify it of the divergence. Unfortunately, it can happen sometimes. We didn't get a pullback on this one. It would have looked something like that, below the open price, pulling under. That would have been an entry, and we didn't get an entry on this one. Price had already then gone above the closing price of the first candle, so it was within the first 2 candles in the situation. The third one did not dip below, and that's fine. Like I say, it can be within the first 1 to 3 candles. So this was our entry, right? Perfect. Price came under the close of the candle that got us across to establish the new trend. You had the anchored wave hitting -60. Unfortunately, not a very clean entry. You had the regular divergence on this entry, and then that would have been your bullish candle that closed across the 8 EMA. So that would have been your entry on that candle, and that's it. You've entered once, and now instead of, let's just go back to the 4-hour. Gonna have to zoom in for this one. Instead of longing the bottom wick on every single one of these candles, if you get the confirmation to do so, of course, if it meets the criteria, now you've freed up your time. Your mental bandwidth isn't getting strained by continuous alerts, and you'll say to yourself, I'm going to hold this until the higher time frame, the 4-hour, is hitting anchor, or if you're getting a convincing close of potentially a reversal, because you're playing, the first candle crossing the 8 EMA. So like here, you would have been looking for shorts, right? So you would have done the same thing here. Just to quickly show you the short example, this is the candle that got you across. Then you would mark up 1, 2, 3 candles. So in this case, it was the first candle that came slightly above that close price, and you probably would have had the 5-minute entry for the short there. We can go and have a look at that. But in terms of this would have probably been, in my mind, for this type of approach, you're looking like getting an exit over there, right? So I wouldn't probably have held it much longer than that. So wherever it was, of course, it did continue going, but then you had the close under, the close above, and you start again. That's your first candle. That's your second candle. This blue candle was your close price, and then you're looking for those entries again. And let's go and see if we had any, right? We'll go back and even look at this one, 19th of October. So we didn't get the anchored wave on this one. We wouldn't have entered the short position. We missed that whole sequence. So that's the only thing. Perhaps you would have had an entry over here if you were looking for every single wick on the higher time frame. But, and this is unfortunate, you missed that one if you were using this method. All right, let's go and see if our second long caught any of the entries. Okay, boom. This was our first candle. Didn't get the deep enough pullback. This was our second candle, and I would argue that perhaps that was as close as it was going to get. And depending on how safe or not you were with your stop, I would have entered on this blue candle coming up on the 8 EMA. Hopefully give it a bit of space. You don't want to get stopped out. A little bit of space. Maybe just under this wick to the left even, you know what I'm saying? And that was it. So you've entered once, and now again, you're not going to be, let's just go to the 4-hour. You're not going to be trying to catch all of these 5-minute, 5-minute, 5-minute wicks on the 4-hour and riding each one individually to its close. You're just going to enter once, free up your time, and when you start getting the situation like it might be a reversal, then you get out of the situation. So it's just for the advanced entries for the 4-hour, 5-minute, and 1-hour, 1 minute. It's because I know when I've traded those time frames, it really can be annoying getting so many alerts, and you really want to reduce the alerts that you're getting for whatever time frame pairing you're playing. You want to reduce it to like one good alert per trending sequence. And it's not a problem, like I say, when it's a daily or a weekly candle. I don't mind waiting for one alert per week. If this was a weekly candle, that's not going to bother me. Even if it's a daily candle, that's not going to bother me. But getting all of these pings, if I was playing a 1 hour 1 minute, that is going to drive me mad. So you just want to catch the start of the sequence and just let the channel run. If you're getting right in at the start of the branch anyway, that's probably your safest stop loss. It's probably your best risk to reward. Instead of scalping each of these candles individually. I mean, it depends on how much time you have in your day. Maybe you only have time to catch a 5-minute entry on this candle, for example, and ride it to its close, and that's it, you're done. So it depends on the individual, but for me, I can't handle every single hour or every 4 hours getting alert. And especially if you're watching multiple assets, it's going to drive you mad. So I hope that is an easy approach to the entry on the advanced side if you do prefer the lower time frame pair-ups. I hope that can help you. And the last thing I'll talk about is the risk to this strategy. As with any strategy, I don't think it doesn't matter what your edge is. If you've got the best edge in the world, every strategy is going to face a trend reversal at some point, and most strategies work best in a trending market. For example, if we were shorting all of these weekly 1 hours, that already looks delicious, right? But at some point, that short channel came to an end, and then you had to deal with maybe a month's worth of reversing price, and you had to navigate that. And during that time, you're probably getting both long and short signals based on your strategy. So how do you know that the trend is reversing? I think we did speak about this a little bit in the intermediate video. TP Min's channel has also put out a video, the latest one, on how to sift through pairs, and they actually talk about take profits and trend reversals there. But it's actually just one time frame lower. So if you're using the weekly and 1 hour, for example, in this case, you'd be looking for the time frame pair up just one beneath that, the highest time frame, in this case the daily 15, right? You're going to look at a daily anchored wave, and I'll show you that, right? A daily anchored wave breaking is potentially telling you that the weekly trend is reversing. So we're just going to mark up all of these reversals quickly, and I'm going to go to the daily time frame, and you can see that, right? A daily wave breaking anchor is suggesting that the weekly trend is about to start, right? It's about to start. So you could say to yourself, looking at it, if this is starting to come up on the daily breaking anchor, getting a bullish close, maybe from this point onwards, you're going to stop looking for weekly 1 hour shorts. Even though you're still under the 8 EMA on the weekly and you haven't yet confirmed bullish on the weekly, you're at least going to stop shorting on the weekly. And between this gap of transitional period on the weekly 1 hour time frame, perhaps now you're only looking for daily 15 longs or longs on the 4 hour 5 minutes. These lower time frames would have confirmed their little channel is starting. If the daily 15 longs do push up and you finally get this close above the 8 EMA on the weekly, then you can flip and start looking for weekly 1 hour long, weekly 1 hour long. And that's how we know if a trend is reversing or not. So that's my cheat sheet for if you are trying to navigate a trend reversal on your respective time frame pair up. Just bearing in mind that sometimes if a trend is really powerful and it's pushing up from the lower pair ups to the higher pair ups, you're probably going to have to wait to look for the higher time frames respective corresponding lower time frame anchor wave to be breaking anchor to get out of that trend reversal. And this is the overall final cheat sheet for this video series. I hope you guys enjoyed this. If you have any questions, please leave it for me in the comments section and I'll get back to you as soon as possible. Cheers, guys.